What's up, everyone? I am Todd Bookspan, subbing for none other than Dave Savage, and I'm super excited to have you all here on the Tuesday Mortgage Coach call. Every once in a while, I'm lucky enough to get to jump in and lead Tuesday, in addition to the Friday call that I co-lead with Dave. And it's always a pleasure. Now, of course, you could send Dave and his son some birthday wishes. Dave is off celebrating his son. I don't know if I'm supposed to say that, but I just spoiled it, whether or not everyone knows. But I'm super excited. I've got none other than my good friend, Keith Collins, with me. What's up, Keith?
Hey guys, how are you doing, man? I'm excited for this. It's going to be a fun one. It's going to be a fun one.
It is going to be fun. And really when I was kind of deciding what to do on this call, I was really thinking, how do we really talk about what's, I think, the hottest topic in the market? How do we actually support our real estate agents? And so, of course, the first person who came to mind was you, Keith, because I know you've been doing so much talking around that within the Mortgage Coach Clubhouse group. Of course, you're one of my original gangster Win by Noon users, you and your team. So, of course, I always love to give you a plug for that as well. And then you decided you would even one-up me, and you got a special guest that you invited along.
Yeah, absolutely, man. I was just thinking about it this morning, and I was getting ready, and I'm like, it would be awesome if I brought on a real estate partner that I've worked with for a long time, and I immediately thought of Greg. And I think it's going to be really, really awesome. And he just popped on, so I can introduce him really quickly. So Greg Mcclure is a great friend of mine. We've been friends for years. We've probably been working, well, for sure, at least 10 years together within real estate. And about 7 or 8 years ago, he actually started a division of Realty One Complete up in Northern California. It's one of their fastest growing franchises that they have in the nation. He has over 650 realtors that work with him in that community he's developed. And honestly, he's probably one of the brightest, most tech savvy agents that I've seen and work with. And it's always cool. He told me this one time. He said, when you put smart people together to have just a random conversation, good things come from it. And I was just kind of thinking about it with this, as if we just, get the three of us together on this call and just riff. I think there's going to be some really good information that comes out of helping realtors in this crazy market, and then helping loan officers align with the real estate partners to do that. And Greg, more than anybody else, has hundreds and hundreds and hundreds of conversations with his realtors on how to be successful in this crazy market. Because Northern California, nationally the market's hot, and Northern California is one of them. I don't know if it was, I think it was Housing Wire. Housing Wire a couple months ago said Sacramento is the #1 real estate market in the nation. So it's nuts. It's nuts up here. So I'll give it back to you, and we've got Greg on.
Well, definitely super excited to meet you, Greg. Appreciate you carving out time for our community, because this is the hot topic. Certainly want to give a quick shout out and plug, right? A lot of you guys have heard Dave and I talking about the Modern Real Estate Summit. We are less than a month away. It's 4/21/21. And if you think about the Modern Mortgage Summit that Dave and I did last fall, keynote speakers, half a dozen, 18-minute top conversation time, and then a lot of quick hit how-tos and great scripts. Our main keynote is Ryan Serhant, but we've got over $3.5 billion worth of production with all the other producers that we've got that'll be part of it. And so it's really an all-star cast. And anyone who's thinking about how to learn how to be more valuable to your real estate partners, the best way to do it is to learn yourself what they need to learn, right? Learn the best practices as a real estate agent. So tickets are inexpensive. You just go to modernrealestatesummit.com. If you're looking to buy more, we got a great branch pass. So just reach out to Todd at winbynoon.com or ping me or Dave. We'd love to set you up. We got some great ways for you to participate if you want to buy more than 10 tickets. But the branch pass is probably the hot topic. And so appreciate you being here, Greg. So let's kind of jump in. Why don't you add anything else you want to say about Keith? I don't know if you want to say anything nice about him or not, but certainly your resume speaks for itself. And I'll let I know, Keith, you said you had some questions going, so I'll just let you jump in, and then I'll kind of pepper you guys with some thoughts and comments as we go.
Yeah, man. I mean, I've got a couple topics here that I kind of just wrote down, but honestly, Greg, I just wanted to riff with you a little bit. I mean, right now it's been gnarly. You say this all the time. When's the spring buying season? Everybody thinks it's like, it's June, right? It's not. It's January every year, and we talk about that a lot. And it's nuts out there. It's an outliner. Everybody's talking about this property. I know which one you're talking. I'm talking about the 122 offers on one house. It's an outliner in our marketplace. That is not indicative of the overall marketplace that we're living in, but a lot of homes have multiple offers in our market, and we're getting beat out left and right. I don't think I've ever worked harder as a loan officer to support my realtors and my borrowers trying to get their offers accepted. And yeah, man, I don't know if you want to comment on that or where you want to jump in, but really, the topic on this is how mortgage professionals can support their real estate partners in this marketplace to maximize relationships and be successful.
Yeah, thanks. And Todd, thanks for having me on. I appreciate it. Hopefully I can add something to the call other than just sit here and stare at the camera. But yeah, I mean, I've been saying to my agents for months now, it's brutal to be a buyer's agent. It's like a little bit of a catch-22. Like the market is great, right? Unless you're a buyer out there trying to get your offer accepted. And I think I do know which property you're talking about. We had another one in the office, 200,000 over asking. Our agent, no contingencies. They said they weren't even in the top 5. They didn't even get a counter offer. It was like, thank you for your offer, goodbye. So yeah, I mean the market, and you could probably pick any market in the country and pull a story out like that, right? So I think, and I don't know if this is just a personal philosophy from me or something I try to instill in my agents is like, your relationship with your business partners is extremely important, especially in times like this. And whether it's your home inspector, your favorite escrow officer, or in this case, your LO, I think having that strong relationship where your LO, your favorite LO can go to bat for you and help support you in these critical times is absolutely paramount. And for those agents that haven't established those relationships, and I'm sure I'll flip it around, the LOs that haven't established those relationships, you can find yourself kind of spinning in circles trying to look for help, and there's none out there for you.
Agreed. I mean, I think, we can jump into this further. I think, the basic is just reaching out to your agents and asking, how can I help? I mean, that's where it's going to start. One of my loan officers came to me yesterday, Randy actually came to me yesterday. And, one of the big pushes that we're doing in our market is find 40 agents that can help. They can send you 5 buyers over the next year. That's our thing. Find 40 agents, send you 5 buyers, and just reach out to them, work with them, connect with them, provide opportunities for them, and try to develop a new relationship with some new people. And he reached out to a real estate agent, Masters Club real estate agent, which is one of the top percent in the area. And he's like, man, I haven't heard from a loan officer in like 9 months. So we've been doing refinances, right? A lot of them have been doing refinances, and they completely neglected their real estate partners. And so I think this conversation is so timely because, the market is shifting right now. The market is shifting, and shame on a lot of loan officers who've neglected their real estate partners, but for those that have, it's a reality. And I think right now what's really cool is, and I've said this a few times before, is I think some of those bigger mortgage professionals in those markets that normally have the stronghold on relationships, like, they're the top dog in the area, they're one of the big producers, they're working with the big real estate agents, and it's a very tight relationship that they have. I think that those relationships right now are on a fragile foundation, because those loan officers typically have larger databases and have been focusing on that low-hanging fruit. So I think the immediate opportunity right now, and why this conversation is so timely, is literally just pick up the phone and call. And I think the traditional lower producing loan officers have a lot of opportunity right now to go after the bigger relationships that they may have not been able to in the past. I don't know if you have anything on that.
Yeah, I mean, I have one of my famous Gregisms, cheesy sayings. I'll just apply it to your business. And if you're a mortgage loan officer and you're not calling your realtor partners, another mortgage officer is. So, right. So I think it's critical more than ever. And I've been a believer forever is to have a smaller pool of business partners, as opposed to just trying to do that wide net. Have a smaller pool, but do a deeper dive into the relationship and a deeper dive into helping incubate the business.
I think
so. We're going to jump into go for it. What do you say there, Todd?
I was just going to say, loan officers are always just scared to make that call. So, Greg, do you have any suggestions on something that a loan officer could say to you or an agent in your office that might get them to actually have a conversation and eventually meet up for a cup of coffee so they can discuss business a little more?
I mean, I think there's 2 different approaches. I think one that I like a lot, and I use myself, is like it's calling for a purpose. I got a class coming up. I want to share something with you. I thought this would be great for you. I think that's a great segue. And also just come from a place of help, right? Instead of asking for the business, offering help. Because if you offer help, I think the business often comes from that. So especially right now, I mean, I was on the phone this morning with Keith before 8 o'clock. We have an issue with an FHA, case number won't get reassigned and stuff like that. And I think if you don't have that relationship with your loan officer, your business partner, that conversation might be not be able to be had in a timely fashion to get something done. So asking how you can help and calling for a purpose, given some value is always good.
Love it. Thanks.
I think right now, one of the things that I've always tried to do is find a need and fill a need, right? Find a need, fill a need. If you can find the need and fill the need, you're going to start a relationship. It just is what it is. Now that relationship may not be immediate, but it's an in the door, right? And so for me right now, it's what's the most relevant topic in the marketplace and the largest challenge that our real estate partners have at the moment. And for me personally, I think it's getting offers accepted and low appraisals. So as a buyer's agent, right, there's listing agents that may have other challenges, and the challenges that they have are similar, but just with a different perspective, right? But for me, I'm looking for agents that can send me buyers, right, as a loan officer. So what are the challenges that agents that have buyers have right now? Getting offers accepted and low appraisals. And so for me, talking about inviting, when you call someone, invite them to something and add value. That's what you need to do, right? Unless it's a warm introduction for something else. If you're cold calling somebody, invite them to something and add value. And so what are the most relevant topics in your marketplace? Create a class or a topic around that, or have 2 or 3 really easy things that you can just kind of lead into that conversation. And one of the things that we're playing with, and I'm stealing this, I think is it Amber Kovart? Or she's with Guild and she's done a couple talks. Am I saying that name right? Todd, help me out there.
Yep, she's awesome.
Okay, dude, she's brilliant. And didn't she do a whole thing like appraisal guarantee or
appraisal gap strategy? And so
appraisal gap strategy, right? And so what I came up with is appraisal insurance. Right. And so appraisal insurance. And so what we're doing is I created a couple total cost analysis around how do we structure our buyer in a scenario where the appraisal is going to come in low. Because one of the things that a lot of our buyers are having to do right now, and Greg, you just mentioned on that, is no contingencies. So we're writing offers with no appraisal contingency, loan contingency. And now we're seeing some offers with like no inspection contingency, which is crazy, but that's the market that we're in. And so as a buyer, what's the concern that you have right now of writing an offer with no appraisal contingency? What happens if it comes in low, right? So before they write the offer, get with the realtor and identify like, okay, we're going to be writing at 620. What do we think it's going to appraise at? I don't think it's going to be 620. I think at best we're going to get 600. It might be 580. So putting numbers together with the customer ahead of time to show them if it appraises for low, how can you potentially use a mortgage strategy, knowing that if it comes in low and you're going to potentially have to accept that because you're writing without contingencies, that those numbers don't change very much. And there's scenarios, and we can put them in there. I'll get them to Dave, that we can put in a couple TCAs that we've done where we're showing the buyer how a low appraisal doesn't necessarily change your cash to close or payment. And so for me, that would be, and this is what I'd love to hear from you, Greg, is for me, so knowing that, like I have that pitch or strategy, how would I package that, do you think, and call realtors and try to get attention and an appointment?
Just like that. I mean, that was perfect, right? I mean, I don't think that you need to, I don't think you need to change anything. I mean, it is a major issue that we're having, and can you imagine being a buyer just writing offer after offer and then finally getting accepted and then getting kicked in the wherever because the appraisal came in so low, and then it's like, now what? I mean, you feel like you're just getting beat up every time you turn around the corner. So I think you package it exactly how you described it. I think that's a great conversation to have. Do we have that class scheduled yet?
We don't, but it's on the calendar. We're putting it up. Yeah. That's going to be next month.
Okay, good. So, but you know what? I wanted to touch something you said, Keith. You said something to the effect of, when you're cold calling, add value or whatever. And I would just add one more thing to that is, don't confuse your timing with their timing. You just want to be that person that when their LO does something or doesn't do something, that they call next. So it might not just be that immediate, hey, yeah, great, I'm sending you all my loans tomorrow. It's going to be more like a cultivation of that relationship, just sitting on the sidelines, because something's going to happen if they're not happy or they don't have a good relationship. And when that happens, I think you will just want to be that first one that they think of when that happens to call.
100%. So this would be an interesting way to take this too. I mean, we have an advertising agreement with you, with your company. And so it's somewhat of a closed office. So it's difficult for another loan officer to get in, but let's just say we didn't, right? And your office was an open office, if you will. There was opportunities for you to let other loan officers come in, because for me, that was always one of my big strategies and quite frankly, that's how I targeted you, right? When you were at SmartClick Realty, it was you were closing the majority of the transactions, but you had, 20 or 30 realtors. And for me, it was an opportunity to come in and potentially like one to many, right? I can come in and talk, and then there's a captive audience of other realtors that can, and that I can go help and support. So if I was a loan officer that wanted to try to get in front of you and your realtors, what do you expect? What would you look for? What would you want in advance before you said, yes, you can, because it's brand for you, right? Anytime you, as Greg Mcclure, the owner of Realty One Complete, go to your real estate agents. And I think that's something that loan officers don't think about all the time, right? You're telling your agents, go to this class. It's going to be awesome. It needs to be awesome, because the next time you do that, if it's not, it's less likely that you're going to get as high of attendance as you would if it was, right? So what are your expectations as the broker owner of this large real estate company for a mortgage person, a title person? Like, how do they get in front of you? And more importantly, what do you want from them to get in front of their realtors?
A couple things there. Okay. So all of my vendor partners, like I tell the title reps, which I love the title reps, this isn't it. Like, if your value proposition is dropping off pens and notepads at my office, I don't want you in my office. That's not a value proposition. That just clutters up the office, right? So I always push my business partners to bring something more to that. And the value that I like is education and resources. But education and resources that they can use in their business today. So when they walk out of that class, they feel like they have a nugget or something that they can apply today to improve their business. So I hold a pretty high standard to my business partners. I expect a lot from them because we're giving them this opportunity. And if there's someone new, so I'll just use your scenario, Keith, where let's just say it's an open office and an LO came to me and said, hey, I want to give this presentation. The first thing I would say is, like, go create relationships with my agents individually. And then let's talk after you've done that, because then I can go to my agents and go, hey, is this person legit? Do they add value? Are they giving you education? Are they giving you resources? Are they improving your business? And if the answer is yes, then I would be happy to bring them in front of the entire group. But I have a bit of a vetting process. Create that relationship one-on-one, then let's grow it from there. If you're doing what you say you're going to be doing.
I love that, man. And it's interesting because you mentioned that's kind of how we started our relationship, probably 10 or 12 years ago. It was Lynn Mcclure. I was doing transactions with Lynn, blast from the past, right? Doing transactions with Lynn. And I reached out to you to see how I could potentially add value to you and to your agents in the office. We got an appointment and it kind of started from there. And that was my whole angle. My angle was, how do I continue to bring value to your real estate agents? But I didn't approach you yet until I had done some transactions with other agents in the office to try to kind of get that in. And I think that's an amazing opportunity right now, right? Because there are those small to mid-sized brokerages out there where, and you know this, right? Where the broker owner is the person that typically does all the real estate or a large portion of it. And then there's, 10, 15, 20 agents that do some of the real estate. And, as a loan officer, you want to work with the highest performing real estate agents that you can, but you're just not going to get an appointment with Greg. So for me, that strategy was to go after what we perceive as kind of the lower hanging fruit, right? The easier agents to get in front of, establish a relationship and a brand, and then leverage that to get an appointment with you. And it worked.
Yeah. Well, and I think another level for me, at least, is being sincere and authentic to what your value proposition is. In other words, if you tell me that I want to help you grow your business, well, you better be working to help grow my business. Otherwise, you're not sincere, you're not authentic. And from that point forward, anything that comes from you, I'm just probably I'm gonna be a little hesitant or a little pessimistic. And so that's why I said earlier, I think doing a deeper dive relationship on maybe fewer agents is a smart strategy, because you can truly add value and invest in their business. And I've always come from a place that, if you give, you'll get that back tenfold. So having that authenticity in your value proposition is important, because I think sometimes people create value propositions and it's a tagline, and it shouldn't be a motto or a tagline. It should be a way of doing business.
100%. That's so good. You got anything on that, Todd?
I'm just laughing because you and I are both laughing about that. I mean, being authentic should just be, a admission, price of admission, especially, in this group. But I mean, to me, so far, the big takeaways, right, is to have a purpose when you call. And I think, Keith, you laid it out there, right? I mean, use your appraisal insurance, or as Amber called, the appraisal gap strategy, and really use that as your education piece, right? It may be pretty easy to call up a real estate agent and say, gosh, I'm sure you're getting bombarded with loan officer calls, which we already established they're probably not, but say it anyway, and say, hey, I just didn't know if you had time. I would love to go over what my appraisal insurance strategy is for the fact that, a home may not appraise in this market, right? It's something when you say it with a unique phrase like that will hopefully get them to actually say, this guy is saying something different, or this gal is saying something different than what I've heard. And then you've got the ability to say, well, let me just forward you over this total cost analysis, basically copy over the one that Keith is going to put into the feed down here below later on, and then copy it yourself and then put a video on it that's customized for the agent, right? You can say, hey, Greg, it was great talking to you. Here's my appraisal gap strategy, or my appraisal insurance strategy. And this is what I send over to clients so that they're clear on, what is going on. And so just think through, I mean, there's just a lot of nuggets here on what you can do without spending money with the resources and tools you already have to add value and build relationship with agents in this market, because, we've already established it. Most agents haven't heard from even their best lender in a long time.
Yeah, I love that appraisal insurance or appraisal gap. I love it's the concept of merchandising or creating a brand around a concept. And the great example I love to share, because I believe in doing that, like it would be the conversation. How cool does this conversation sound? Like, hey, Mr. Realtor, I'm Keith, and I just wanted to know if you've heard about my appraisal insurance program. Like, that sounds really cool, as opposed to, hey, I'd like to talk to you about what happens if your client the house doesn't appraise. It's kind of like the Happy Meal concept. People don't realize Happy Meals are just a cheeseburger, fries, and a Coke. But when you say Happy Meal, it's like, oh, I have a Happy Meal? I'd love to have a Happy Meal. So it's taken that concept, kind of packaging it in a way that gets people's attention. So I love that concept.
Another way to approach it too is you can say, hey, I just wanted to call. I know you've got another loan officer, but I didn't know if he had an appraisal insurance strategy.
I love that.
There it is.
Right? Challenge
there
it.
It is.
Another loan officer doesn't, right? So, that's another great way to look at it. And people are asking. So I guess if you're just joining us, I'm Todd Bookspan. I'm hosting in here for Dave. We got Keith Collins, Market Center leader from Movement Mortgage. And we got his good friend and partner for over 10 years, Greg Mcclure, who leads Realty One Group up there in Northern California, over 650 agents underneath them. So we've got a wealth of knowledge here. People are asking if you could just go over your appraisal insurance strategy one more time, Keith.
Yeah, definitely. So, and there's a couple of resources. So what I'll do is when this video goes live within the community, I'll upload a couple of TCAs that I've used. I've got one that I'm using right now for a client, and then I just have a generic one that I use for these types of conversations. There's another thing that I would also talk about too. Scott Nicholson has Lender Launchpad, and it might be something that I would look at for this type of scenario for targeting realtors. What Lender Launchpad does is you can text in a number, which is really cool. So you text a number, and then and people have seen this before, like text appraisal insurance to 1, 2, 3, 4, 5, whatever, right? And it'll immediately respond with whatever information you want to present to that person. And you can have the actual link to the TCA. So also, Amber, say it again for me, Todd. I'm sorry. Amber with Guild, what's her name? Amber Kovarik. So she actually did a couple talks on this within the mortgage coach community. It's going to be on YouTube as well as you can probably find it on Facebook. But appraisal gap insurance, appraisal insurance, the idea is the property doesn't appraise for the contract price. And potentially the buyer's in a situation where they've released contingencies and don't necessarily have an out technically associated with a low appraisal. One of the questions I get a lot, when we're calling the real estate agents behind the offer, is the real estate agents asking me, does the borrower have the funds if the property doesn't appraise? And my response is they don't have to. And that's kind of what stops realtors in their tracks a little bit and initiates another conversation, because most people just assume that if the appraisal comes in low, that gap needs to be made up by the borrower. Well, technically it does, but it doesn't have to be with additional out-of-pocket expenses. What we can do is adjust the loan to value. And a really easy scenario of this is like a VA offer. And I think VA home loans are like the best home loans right now for a couple of reasons. One, most VA appraisers are just VA appraisers. And who's not accepting VA home loans right now? Like everybody. So VA appraisals are actually coming in really quickly. So that's another talking point that I'm having with my agents is like accept a VA transaction, especially if it's got down payment, because VA is 100% financing. So if we have a borrower, let's just say that's doing 20% down on a VA home loan and the property appraises for 10% less, I just do a 90, basically the numbers, the math's a little bit different, but I basically do a 90% VA home loan on the appraised value. And then they come in with the difference in cash, but that doesn't change their cash to close at all because they were already coming with 20%. VA allows for 100% financing. So all we're doing is just decreasing what they were saying the borrower's bringing in with, and then using those funds to be able to pay the seller, if you will, in the difference, but the rate doesn't change. There's no mortgage insurance, so the mortgage insurance doesn't change, and the loan amount doesn't change. Literally no change in cash to close and no change in payment, and the appraisal came in 10% low. So that's where I think a lot of people don't understand how you can just change the numbers. So that also works with mortgage insurance, right? So if borrower's putting 15% down or 10% down, as long as you're not in a minimum down situation, so 3.5% FHA, 3% conventional, and you don't have the ability to do that, as long as you're not in a minimum down situation, borrower puts 10% down, it appraises for 5% less, just go to a 95% LTV product and then use the difference that they're now saving because of lower down payment and apply that towards the difference in price and appraisal. Todd, does that make sense? Greg, does that make sense as an agent, how I explain that?
It makes sense to
Ran
me.
fast.
Yeah, and someone's in Kelly's asking, she said she called an MI rep and they don't quite understand how the upfront MI and buying out the mortgage insurance actually works, which first off, I would call a different MI rep if they don't understand how borrower paid upfront mortgage insurance. That in itself tells me that that's not your person. Your person should understand how it works, but it really works the same way as what Keith just said. As long as they're putting down enough money that you can bridge the gap and still have it be less than a 95% LTV loan, right? You can add the mortgage insurance, upfront mortgage insurance on top of the loan amount up to a total loan amount of 95%. So if it costs 1.5%, then they have to put down 6.5% minimum in order to make it work, depending on what their credit score is, et cetera. But other than that, what am I missing there that we should tell Kelly? Really, literally all you're doing is adding on a fee to the client's loan for the upfront mortgage insurance. They don't have to come out of pocket. It gets added on the loan. Maybe adds $8 or $10 to their mortgage payment. And then they no longer have to have that 20% down, just like in Keith's VA scenario. If it under appraises by 10%, then they're actually still going to be putting down their 20% they were putting down before. The only difference is now they also have this extra upfront mortgage insurance premium being added onto their loan amount. Right,
exactly. And if they're service related or disabled, then that's waived. For high qualified borrowers, there are some programs out there where there literally is no monthly mortgage insurance on a conventional. But I've got a borrower right now where this is the exact scenario, and we're saving the transaction. So the appraisal is with a different lender. It's coming over to us. We're going to use the same appraisal. It's low. And basically, the mortgage insurance, I think is $75 more per month. The borrower's got to come in with an extra $7,500 to just buy the loan. It appraised for 50 grand less. So it appraised for 50,000 less. The borrower is just coming in with an additional $7,500, which is basically bringing the loan balance down to 95% LTV. The mortgage insurance is $75 more per month, but because they're coming in with $7,500 down in the loan amount, the payment savings in the loan is $25 in savings. So really, $7,500 more per month out of pocket, and the payment's only $50 more per month. and it appraised for 50,000 less. So you just got to do a little mathery, if you will, but it works.
And then remember, if the person's got a really low credit score, it's harder to do because the cost of that then can be close to 3%. So the better their credit score, then the lower it's going to be. And then, the less likely you're going to have a QM problem. And then, that's really the real challenge that you may have if they're low credit score borrower. But the bottom line is the whole point is to be offering a different strategy, right? Something else that you're going to tell your borrowers. In fact, we're going to have Amber talk about that at the Modern Real Estate Summit. So it's a great way, if you feel uncomfortable explaining to your agents, invite them to the Modern Real Estate Summit, and then they can see her do it and say, yep, I got that too. You're inviting agents to that, aren't you, Keith?
I am. I just actually had a conversation with Dad.
Yeah, you can call him
Dave.
Dad.
I had a conversation with Dave before this call, and we're getting some tickets. I'm going to get some for Greg here and a couple other people, but yeah, I think it's going to be awesome. So this is an opportunity here. I got a question for you, Greg. So check, how would you present this information to a listing agent? So I'm going after, because I just picked up a rescue transaction, if you will, because it didn't appraise and we have a strategy. So my listing agent that I work with was like, well, my lender knows how to work this out. And so I picked up this transaction and used the appraisal. So would the pitch be the same, or would you change that differently? Would you change the messaging a little different for a listing agent? Because there's that opportunity there. If their values come in low, how do we save transactions?
Yeah, no, I think the conversation would be basically the same. I think listing agents are just as busy in a different way. They're trying to funnel through these offers. Can you imagine trying to sort through 20 plus offers and figure out what you're going to counter, what you're going to not, and then thinking to yourself, man, if we pick the wrong one that has some financing issues or the appraisal comes in low, then we're gonna have to start this process again. And I can tell you, as a former really high volume listing agent, that's the last thing you want to do is kind of roll out a whole bunch of offers again and start all over. So I think showing them how it can save them time, money, effort, and energy in selecting the right offer with the right LO attached to it could be very, very beneficial.
Is there too much?
Can I say one more thing? Sorry, I didn't mean to interrupt.
No, go.
I feel really like I lost the hair war this morning because Keith is all, and then Todd's all boom, and then I got this. I don't even know what I don't even have a hairstyle, and you guys got good hair, man. This is crazy.
Well, I'll tell my wife you said that. This is official. My wife's been cutting my hair now for a year, so
she's doing a good job, man.
Looking forward to
doing a good job. I got one wife haircut, and it was a mohawk.
Ooh,
nice.
In the beginning. So yeah, she's doing great. So I think I lost my train of thought. Yeah.
Are you finding, Greg, that a lot of, if you had a property and you got 20 offers, how many proactive calls would you get from loan officers explaining the quality of their pre-qualification?
One.
That's
I would say the ratio is that bad.
So think about that, everyone. My team is seeing over and over again, kind of that same thing where literally someone will say, hey, we got, 4 offers that were all comparable, but you're the only loan officer who called. And so therefore, I know you're going to communicate during the transaction and that's what we want. So I recommended to my clients that they accept your client's offer.
There's so much of that right now. I was running one of the clubhouse calls in the Mortgage Coach Clubhouse community, and I brought on another realtor that I work with. She had 45 offers in a property in Elk Grove, which is a local community in our market, and she had 2 loan officers call her. That's it, 2 loan officers call her out of 45. And so I think there's 2 opportunities here. One is get your darn offer accepted and do everything that you can. But there's an opportunity with the listing agent right now too, right? That listing agent may not have their loan officer doing this type of follow-up, and you're going to stand out there. So there's 2 opportunities in that. It's not just trying to get your offer accepted. And I've talked to them man, I'm going to make another phone call and it's not going to get accepted. You got to think about that differently. It's not just your buyer that you're pitching. You're also pitching yourself for future opportunities with that listing agent. And if you start talking about things like low appraisal insurance, there's an in right there. An old coach that I had used to tell me the best way to get new business is from your current business. So every time you're working with a client doing something, always look for opportunity to get additional business from that transaction. And that goes also hand in hand with writing offers on properties. How can we go get additional business from those listing agents? So Greg, is there information that you would really want to hear? And is there too much information and too much communication? So you're the listing agent you're the listing agent accepting an offer. Is there too much communication?
No, I think that's probably rhetorical in nature. Yeah, I don't think you can ever over communicate. And I just, here's something to think about. I think, especially with kind of some of the concepts, I love the appraisal insurance. And so here in California, and I don't know if this is a trend across the country, but California Association of Realtors just came out and said, the buyer love letters are discriminatory in nature. In other words, no more buyer love letters. And if you really think about it, you put a picture of, what if it's a same-sex couple? Or what if it's someone wearing a Trump hat or a Biden hat, or it's and then a seller looks at that and goes, well, I don't want to sell to these people because I don't believe in that. So really discriminatory in nature. And with our fair housing laws, this is a big deal. We had a big legal update yesterday with our general counsel. This is a real thing, and there's going to be discriminatory lawsuits coming out, especially because buyers are struggling to get their offer accepted. So if they can hang their hat on something else, you could see where that'd be a big problem. But I said this on our call yesterday to our general counsel. I said, I got an idea. Instead of writing a love letter from the buyer, what if the love letter was from the agent describing, I've closed 25 houses in that area, and I've been in the business this long. And by the way, my LO, I'm adding this right now on the fly, has a great program called Appraisal Insurance. And that LO will be able to get this loan done even if our appraisal is short. So kind of writing like a bio resume on the agent and how good they are. And here's my team, here's my TC, and here's what they do, and here's my LO. And I have a team of people, professionals, that if you choose this offer, it's going to be smooth sailing for you. So adding that little concept that you just did might be a great little addition to that resume when you're looking at it. And being primarily a listing agent in my career, I look at that stuff. Like, I want a direct lender, I want a local lender, and I want someone that knows what they're doing, because we get an escrow. I want this thing to close so I can move on to my next transaction.
I love that, man. There's a question that came up is, what are the top 4 points you wish an LO to communicate during the to you during the transaction? So I think this is during I would look at that like the offer. So in the offer, what are the things that you want to know or agents want to know? And then during the transaction, what do you want to know? What kind of communication you want?
For me, it's always the point or the stages of where the loan is. I want to know where that's at constantly. And more than anything, if something's going bad, don't go dark. Do the opposite, right? If there's something comes up and there starts to be little hiccups and you're working on it, I think a lot of people tend to kind of go dark to see if they can fix it. They don't want to have that conversation. I want the opposite. If things are kind of going sideways, or there's a struggle or something pops up, let's work on it together. Don't go dark on me. So the key stages of the transaction, I want to know where that's at, and where the loan is in the whole entire pipeline. That, for me, that's what I want to know.
And personal phone calls. So I'm going somewhere with this, but personal phone calls. You want a personal phone call update? You want a text? You want an email? What do you want?
I mean, for me, a text or email better.
Right.
If it's a phone call, unless something's going bad, then I think a phone call is great.
That's great. You got it.
If it's just a simple update, we're all busy, simple update, text, hey, Greg, file just got out of underwriting, or whatever, or it's into the fundings department, or wherever it's at. Like those little updates, I don't think a phone call. Something going sideways, I probably want a phone call.
So here's what we're doing on our team, and it's working pretty good. And I love, if Todd, you want to jump in, or Greg, you want to jump in and just give us some feedback on this. So from an offer standpoint, I'm asking every single real estate agent to copy me on the offer. And I have a signature that we've created where it's basically a draft. So that email goes out, I'm copying the offer. It's an immediate reply, like within seconds, an immediate reply to the listing agent, thanking the buyer's agent for the offer, addressing the listing agent, buyer's qualifications, not personal information, but buyer's qualifications. We verified everything and who we are. It's a mini 3-sentence bio, and I can put this in there. Then hopefully the real estate agent has put the buyer's agent's contact information in the contract. It's not often that they do. I'm asking the agents to text it to me, but you can go to Google and find it. and I'm immediately calling the listing agent. And if I leave a message, then I'm sending a video text afterwards, and I'm sending them all my contact information. So I'm making sure that they have all my contact information. If I'm getting on the phone with the agent, I want to introduce myself. I want to let them know that this is part of our process in this very competitive market. And I want to let them know that I'm here to help and support them to get this offer accepted. Is there any information that they need? What I've found has helped is I'm asking the question, what's most important to your sellers right now? Because closing in 15 days may not be what's most important to the sellers. It might be, but it might not be, right? They may want a 45-day escrow and a 60-day rent back because they're looking at buying another property. So it's addressing those concerns, Oh, no problem. 59 days is no problem on a rent back for us. 45 days isn't an issue. We can lock the rate for 60 days. Like, I know these buyers want this house, whatever we need to do. The other question that I'm asking is, I'm just flat out asking, where are we at? And I don't know what it is, but I'm getting that information a little bit more than sometimes my realtors are getting. So I had a conversation with an agent last week. We had an offer I wrote, and I said where we're at. And the agent's like, well, everybody's pretty close, but you're not there yet. And I'm like, so like 5,000? He's like, that would probably get you there. And I'm like, so if we up the offer to like $5,000 or $6,000 and didn't change anything else, we probably get it. He's like, yeah, that would probably do it. I'm literally helping negotiate the offer right there. I called the agent and they said, Keith, that's crazy because I just spoke with him 20 minutes ago and he wouldn't tell me the information. So, and I'm having that happen. And I don't know why it is, or maybe it's just my persistence, but that right there is helping me get those offers accepted. And then I'm taking that information, I'm going on Facebook, sharing how we helped beat out multiple offers and how we supported our agents get it. Because that's the thing we do. We get the offer, you got to talk about it on social media, you got to share it with your realtors, do a monthly magic or whatever it is. And then I'm going to talk about what we're doing when we're in contract. And then if you guys want to jump in on it. So once we're in contract, I'm calling the listing agent again, because now I want to update the agent. I want to stay in communication with them, but I also want to show them how awesome we are. And so I'm asking them, I got 3 basic questions for them. And I got this from Dan Keller. It works. What's the best way for me to communicate to you? Do you want a text, an email, phone call? And is there anybody else part of the transaction that we need to be updating? Do you have a TC or an assistant that you want us updating across during the transaction? Are there any COVID-related concerns or appraisal concerns that you have? So is there any access issues that we have, or are you worried about the appraised value? I'll talk about why. And then the third thing I'm asking is, do you, your sellers, have any travel plans? Is there anything that I need to know about during this escrow so that we can work around for your sellers to make this as smooth as possible? Like, that's standing out in a crowd. Now, from an appraisal standpoint, if they say, yes, I'm worried about the appraisal. Okay, I need you, I'm asking them, how many offers did we get? Because the appraisers can make an increasing market adjustment on the appraisal, but they need the data to support it. So let's just say the home's 400, we went pending at 450, and there was 5 offers at 440. I'm asking the listing agent to remove access for the appraiser to the property. So they can't, like, if they have a lot of appraisers have lockbox these days, right? And so if it's a vacant property with a lockbox, they're just going to go and inspect. They're not going to meet somebody there. So I'm asking them to remove that if that's there, and I'm asking them to meet the appraiser at the property if they can, or I'm setting up for the buyer's agent and bringing the first page of every single offer to hand to the listing agent. To hand to the appraiser to show them all the offers that we received, so that they can have ammo to support the value. And again, I'm explaining that in the initial conversation with the listing agent, and I'm starting to receive leads from the listing agent mid-escrow, which is really cool. You guys want to add to that at all?
Well, I want Greg to add, since he's got to jump in a couple of minutes, and add anything else that he thinks that you should have asked him, so that loan officers can get better relationships and help their agents in this market.
Yeah, well, just to your point, Keith, I mean, I think that, that comes back to just, the 3 questions that you, or the 3 kind of questions, the 3 questions that you asked the listing agent, it just goes back to that kind of basic communication, right? Like I kind of inferred earlier, communication typically goes pretty good when things are going good. When things go bad, it kind of breaks off. So if you could establish kind of this higher level, or set the bar a little bit higher, set expectations a little higher on the level of communication as a listing agent, I would love that. I would love to have that open line of communication, as long as it's consistent, right? As long as, like, okay, I'm Keith and everything's going great. And then all of a sudden I can't get a hold of anybody. That makes me nervous. So I think that would have to be a consistent level of communication throughout that transaction and not kind of deviate. Because if it all of a sudden it's great at the front end and it starts slowing down, it makes me kind of start going, whoa, is something going wrong here? And then just kind of, Todd, to your point or to your statement there, anything else I can add? I just believe in deep relationships. I believe in having business partners that you can rely on and they can rely on you. And even in my new, we have a pretty big new licensee program. I talk about that in there a lot about, get one or two good LOs and then hang your hat with them. Get one or two, escrow officers. Like, keep your business partners small, but keep the relationship deep. And so that would be kind of my best advice. And have your wife do hair.
Thank you. Well, I am 31 years married today, and she gave me permission to be on this call because we took off for the weekend. So I will do that. But thanks so much, Greg. Really appreciate you add value to our community and for putting up with Keith for over a decade. That's got to be really difficult.
Love you, dude.
All right, man. Thanks a lot. Hey, Todd. Yeah, thanks for having me.
Take care, brother.
I really appreciate it. Thanks so much.
Hey, my pleasure. My pleasure. So, I think there was just so many nuggets there, Keith, that we got. A couple things I'll just kind of add, and then I'll go back to your question for me about what you said, because I think you're just crushing it with listing agents. But you heard what Greg said at the end. He said, keep your communication consistent, right? So he said, hey, I love those upfront calls, but keep communicating. And I would tell you that, when I was doing loans and how I'm coaching my team is to not ask what's your communication preference, because I know a busy agent is going to want email or text, but I never was successful at building relationship and getting referrals like Keith is in the middle of a transaction, unless I was building rapport with them each week over the phone. And, there's lots of coaching programs out there that preach weekly update calls, right? It's one of the win by noon target day activities. But once you tell someone, hey, I'm going to call you every week, you could say, hey, I'm going to update you every other week via text or call you, but I'd still call every week regardless of what they say. That's just me personally, because that's how I build a relationship. But once you say you're going to do it, then you become consistent, right? If you say, hey, I'm going to update you every Tuesday and let you know what's going on, regardless of whether anything interesting is going on or not, then you've actually built trust with them by actually making that call every week. And so that's really, I think, one of the keys. And you kind of just heard Greg say, and I think it's just a matter of, this market is so crazy. And I just think that you're asking questions, Keith, that make it different. Most LO, well, I shouldn't say most. The few LOs who actually call just throw up all over the listing agent. And what I loved is that you asked that question, right? What is most important to your seller about this offer? And right there, you just come across different. So on the off chance that more than 1 out of 10 loan officers call, then, Keith is making himself look different. And I think that that's really the key. I mean, the fact that you're getting referrals in process from listing agents is proof that what you're doing is what's needed to be done by all the loan officers who are listening to this.
Thank you, man. I appreciate that. We have to keep our word. It's really, really important to keep our word. And I think most people, when someone says keep your word, they're going to say, I don't lie. Like, I tell the truth to people. But like, keeping your word is the small things too. You say you're going to call somebody every Monday and update them, and you don't do it. You slip on a day and you call them on Tuesday. You didn't keep your word. Right. And now, but if you say that you're going to do that, you meet that expectation, because they're like, yeah, right. You're going to call me every Monday. Yeah, right. That's what the listing agent is thinking. But when you actually do that and update them with valuable information, key dates. So, and that's the other thing I do is when I'm updating, I'm telling them, okay, I've got the close of escrow is this day. I have the loan contingency is this day. I have the appraisal contingency is this day. Close of escrow is no problem. Loan contingency is great. The loan's already approved. Appraisal, I'm a little worried about. And I'm just honest. I'm a little worried about the appraisal contingency is X date. It sounds like we're going to have it on that date, but I might be a day or two late. I do not have any problems at all, ever, when I'm updating them on a regular basis as to what we're doing. But I'm giving them that information. I'm talking about it. And I've never had a problem missing a close of escrow when I called the listing agent a week ahead to say I might be late, when I've updated them throughout the entire transaction, rather than calling the day before and saying I'm going to be late. That's bad. Right? That's bad. No business from them ever again. You call them the day before and say you're going to be late. So like be honest, be upfront, tell the truth, and communicate. And then The other thing I'd go with too is, so let's just say the listing agent says, you know what, update my assistant, don't call me. Okay. I probably wouldn't call him because I don't want to piss him off, but I would be like flies on rice with that assistant, because I want that assistant to be like, wow, I've not had a loan officer. Because how many people are going to yeah, I'm going to update the assistant, right? They're not going to. So I'm going to go update the assistant like that assistant's never been updated before. And then I'm going to have that assistant tell the listing agent, like, we got something different here. So again, if the opportunity is not with the listing agent, where's the opportunity and how can I chase it?
I think that's huge. I've always said to update transaction coordinators. And then, I guess I'm enough of a jerk that I probably would update their assistant, and then at the end still call them and say, hey, by the way, I've updated your assistant every week. But I guess it's better. Your strategy is better if you can get the assistant to tell them how wonderful you were.
Yeah, absolutely. And the transaction coordinators, I mean, those are the best referral sources ever. Transaction coordinators see the good, the bad, and the ugly, right? And transaction coordinators work with multiple realtors. So with the transaction coordinators, like, they need to be your best friends. It's a huge opportunity. And because the real estate agents will go to their transaction coordinators, because often a real estate agent, the transaction coordinator they work with is not, that transaction coordinator doesn't only work with that realtor, right? They usually work with 20, 30, 40, 50, 100 realtors. So they know. So that realtor, whenever they're having problems with their lender, they're going to go to their transaction coordinator and say, who are you seeing doing it well? Who are you seeing close quick, right? The lender that they currently work with keeps on missing close of escrows. Hey, Mr. and Mrs. TC, who's hitting escrows every single time? It's these three people, right? Like that there's an opportunity there with transaction coordinators. And I think, a lot of times loan officers don't go after them. Huge opportunity, transaction coordinator.
Well, there's a risk too. The risk is the opposite. The risk is that you had a tough transaction. Maybe it was out of your control. Maybe the homeowner's insurance was late or something happened. And then because you didn't communicate to them what was going on, they're going to tell the realtor, gosh, you know what, that Todd guy, he sucked, right? You should be using my good buddy, Keith. Keith is amazing. So you have that opposite risk. One of the things I was thinking before Greg took off, when you were kind of giving your conversations that you're having to help your clients get offers accepted. And then you said how you're going and posting it on social media. Are you also weaving that into your initial conversation? So when a client calls you and they're referred over by Greg, are you then building in that your pitch? I don't know if Greg told you, but I do this, or like, how does that go?
It all depends on kind of how the conversation goes. I don't typically talk about low appraisals. I try to not go over potentially negative news in the initial phone conversation, right? I just want to give information and kind of connect. But if they talk about this market or what they think, right, about this market, or, the question, do you think I should buy in this market? Like, they don't even know me. For some reason, they trust me and they ask that question, right? And I'll or is it going to be difficult to buy a home? Like, there's a lead in. So there's a few questions that we'll answer there. But one of the things that we're going to do is I tell them, like, look, like, I believe your ability to buy a home in this market is directly related to your realtor and the skill of your lender and realtor and how they work together. That is the difference in you getting a home or not getting a home in this marketplace. And a couple of things that Greg and I do are this. And then I roll out what we actually do to help them get an offer accepted, because Quicken's not going to go through that with them. The online lender's not going to go through that with them. Like, these people, I heard someone say this the other day, and I'm really trying to formulate how to kind of go through this conversation. But like, people have said, business is not personal. Like, of course it's personal. It's 100% it's personal to me because I freaking care about you, right? And often these clients are using these call center lenders, and what I've been working into the conversation is I'm actually like helping them visualize this person. And I've told them that, like, these people don't care about you. They're in a call center, they're salespeople with a sales manager saying, sell them, sell them, sell them, with a little headset on, sit in a cubicle trying to sell you on a home loan. They don't care about you and they don't want to help you. And they are not going to call the listing agent at 6 o'clock on a Saturday to talk about how qualified you guys are when there's 10 other offers in the property. That's the difference of working with a local lender like myself. And so we'll weave it in kind of that way.
That's huge. I mean, I think that's really critical, right? I love the fact that you're actually, you're giving that. And I could see you totally saying that with the headset on. I can see you while you're talking to the client that you're actually, miming it out and doing that. But it is really critical, I think, to help your client understand how you're different. What is that unique value proposition that you have? And, unfortunately, what our team is seeing in the Phoenix market is that, that client may call the first time and say, yeah, no, I'm already approved with XYZ lender. But once they've lost their first or second house that they loved, then all of a sudden they're like, okay, maybe I'll talk to you now and, hear what you have to say. And I think that that's always the the most difficult thing, is that sometimes a client has to lose a house they love before they understand what it is you're saying. But I think that the way that you're helping them visualize it gives you a leg up. And I would just encourage the rest of you listening, is that something that you're doing? Could you integrate that into your conversations? Because in the end, you don't need to lie and say it's your story. You can say, yeah, I just had a friend of mine, right? And Keith's your friend, right? And here's what he did. And here's how I'm using that to help you get your offer accepted. And then eventually you'll have your own stories that you can tell. You'll swipe
100%. Yeah, no, definitely. And you say it, you got to do it, right? So that kind of goes to keeping your word. You say you're going to do these things, you need to do these things, because then you're just another name in a crowd and another person who told them, what they're going to do and not do. And then in those initial conversations, I don't really like cans or scripts. What I try to do is I just have like these little bulletized responses. I'll say things like, my goal is to help you think about things that you may have not thought about before, right? Or I really think that people in 2021 aren't getting the wrong loan, but they might not be getting the right one. And our process is going to help uncover the right loan, right? So there's little things that and again, I don't say that every single time in a transaction or initial conversation, but I say them often. And they're little statements to help them think that I think differently.
Well, I think that's really critical is to, there's no one magic script, right? People always ask me, what's your magic script with a realtor? What's your magic script with a client? And it always depends, right? You're always gonna have an open, and then you've got to have all those different bullet points, like you mentioned, to, get them down the path to make sure that it's a customized conversation. But those 75 bullet points you have probably are weaved into all these conversations at different points because you've actually taken the time to think about it. And so I think that's where the power, just to kind of throw a couple of resources out there, right? Number one is Scriptapalooza was off the hook a couple weeks back. I think it's already been watched like 10,000 times or something crazy.
Bananas.
So take a look at Scriptapalooza. There's great scripts there. Again, swipe and adapt, take some of those scripts. You memorize it, then you customize it, then you internalize it so that you can use those bullet points like he said. Great TCA examples, and then Keith just recorded one yesterday with Dave, which I haven't watched yet, but I've heard is great on these appraisal strategies. So, use those resources. If you're unfamiliar with the whole idea of picking target days that we talked about to call agents and whatnot, just go check out winbynoon.com. It's just one of the things that I feel is really critical that people integrate into their business to make sure that not only are you doing those consistently, but you do those first thing in the day so you get them done, right? Win by noon. And then lastly, the Modern Real Estate Summit, right? What a great opportunity for you to learn, to have scripts to bring back to your agents. And then also a great opportunity, you do what Keith is doing, is get tickets and then share them with your agents so they can watch themselves. Again, it gives you a reason to follow back up, afterwards. And that's really just ways for you to continue to add value in the market. What else should we use here, Keith, to summarize before we let everyone go off and be productive?
I think there's annual mortgage reviews need to be done right now. 100% they need to be done, especially as loan officers are slowing down a little bit with refinances, because the annual mortgage review right now is not uncovering a refinance, it's uncovering an opportunity for your listing agent. And for your agents. And so, that is one of the big things that we talk about with our agents is our follow-up strategy with their annual mortgage reviews and how we're going to follow up with their customers, probably better than they're going to follow up with their own. And we're always going to bring that business back to them. Using a tool like HomeBot or HomeIQ, I think is a great retention strategy with previous customers that also gives you the information about clients as far as when they're most likely to sell or take an action associated with their real estate, and then partnering with their agent on that and getting that information back to them. I think those things are huge. The other thing that I think is big is, lead conversion, right? We are the primary lead converter for our real estate agent. That's it. Know your conversion numbers. And if they suck, improve them. And if they're awesome, tell the world about it, because that's the deal. Like, we don't need more leads, right? We just need to better convert the leads that we have. And until you're converting 75% of your leads to application, which is totally doable, especially in a high performing team, like you need to get to that place. And then when you get to that place, you just ask that question of that agent, like, hey, what's the current conversion rate with your current lending partner? They're never going to know. And their loan officer is rarely going to know. We convert our leads at about 70 to 75% of the time. And we did that all the way through 2020, one of the busiest years the mortgage industry has seen with its refinances like they were. We still converted lead to app 75% of the time. You send us a lead, they're going to apply. And that's the thing that they're also doing. They're taking all this time to find this lead, to go hand it to their loan officer to say, help me pay their mortgage. And that loan officer calls once, maybe sends a text message. Like, follow up and help that realtor convert. And then go ahead.
Nope.
No,
Finish.
go. I got my final nugget. It's gold.
Your final nugget's gold. Well, then, all right. Well, I know what, I just love it because I know that you're a Win by Noon user, your team uses it, and that's just a great way to track it, right? If you're not having a tool to actually record it, and you can record it wherever you want, a spreadsheet, whatever you do, just Win by Noon is, is the easy button there. But gosh, and I feel bad I interrupted your golden nugget.
No, you're fine, man. I got it. We'll wrap it up with this. So one other program, Pipe Drive, I'd look at that. Pipe Drive, it's like $12 a month. So if you don't have a CRM or a conversion tool, Pipe Drive might be something good for a loan officer to look at. Great tool, super cheap, very visual program I used to use when we moved to our current CRM. Okay, here's the other thing. I think is critical. When you're getting a new realtor relationship, it's often they're going to continue to be working sometimes with their existing loan officer partner. Like, it's just a thing. It's going to happen. So you got to stand out in the crowd. So what we do at the end of every consultation is we ask the customer, how did this go, right? Did we answer all your questions? Are you happy with your information? How comfortable are you with what we've presented to you today? Keith, you're awesome. We love you. It makes sense. We're very excited. We're ready to go beat the streets. Awesome. Can you do me one huge favor? Just one. It's the only one I'm going to ask for. Your realtor referred you to us. It's a big thing to them. They're putting their name out on line when they say, call Keith, he'll take care of you. Will you do me a big favor? And right now, like when we get off the phone, will you send them a quick text message and say, hey, thank you. Keith was awesome. We're ready to rock. And what's so cool about that is every time they refer somebody to Keith, they get a text saying Keith is awesome. Every time they refer to their other lender, lender A or lender B, that lender may be awesome, but they don't get the text. And so it's slow. So over time, they're just like, wow, every time I send them to Keith, they love Keith. Every time I send them to, Joe, I don't know if they like Joe. And so that for us has been huge as part of the borrower consultation. And that's my last part on kind of partnering with realtors.
Dude, that was huge. So I'm just so grateful, Keith, that you jumped on today and you brought along Greg. If you joined late, you missed Keith's 10-year realtor partner, Greg Mcclure, who runs an office of 650 agents. Rewind back, watch the beginning when this gets posted live. On behalf of Dave Savage and the whole crew at Mortgage Coach, thanks, Robert, behind the scenes for making this look good. On behalf of myself and the team at Win by Noon, and you and Keith and everyone, thanks for being here. This call is a wrap. We'll see you next week.
Take care, guys. Thank you so much.